Hello and good afternoon. This is the 24th episode of the Bitcoin Noon podcast. Today we'll be discussing Bitcoin's tipping point, why every indicator is screaming sell before it's too late. So today what we're going to be doing is discussing multiple time fractal analysis, meaning multiple time frames ranging from a monthly, weekly, daily and 4 hour. So we're starting off with a macro, then we're going to go into the daily, then we're going to go into an intraday. Okay, so in that particular order, a top-down analysis. So at the end of the video, if you stick around, you will know exactly at which point Bitcoin tips to be bullish, because right now she is bearish, and I'm going to let you know the exact pendulum shift on decimals where that will come different. Okay, so just follow the video and hopefully we'll get there in no time at all. Now I want to let you know a fact, right? There's a big brand new fact today in the ecosystem, and the fact is this: Ferrari, the Ferrari car manufacturer, has now admitted to accepting Bitcoin and crypto in the United States for all of their cars. So what does that mean? It just means that Ferrari is now accepting crypto payments for all of their vehicles. So it's just a nod in the right direction, okay? It's a nod in the right direction. Shout out to Ferrari. Okay, cool. Now let's go into the real minutiae. So today we've got the Bank of England and the European Central Bank in Morocco discussing monetary policy. I do think that has a negative impact on Bitcoin over this weekend period. So just pay attention to that, because I do think it does have an implication over the weekend period. As you know, legacy stocks and shares are shut on the weekends. However, money does not sleep, and Bitcoin trades Monday to Monday, Sunday to Sunday, with no days off, no bank holidays, no weekend bollocks. So what we're here to do is demystify price action delivery on the monthly, then we'll go to the weekly, daily and 4 hour starting from now. So looking at the monthly, what do we see? So looking at the monthly, we do see a myriad of things, but top-down analysis will be looking at volume, then trend, then momentum, in that order. So let's go. So looking at volume, we do see 83% sell pressure engulfing the market, which does mean that the sellers are winning the tug of war. Very simple. Now what we also see here is a sell side imbalance, buy side inefficiency, something we've been echoing on this podcast for many episodes, and the prophecy is being fulfilled in real time. So the worst month this year was in August. That's a fact, not an opinion, it's an observation. An extension to that would be we topped out in July. We literally topped out in July. That was the current yearly high, previous quarterly high, and ultimately the July high that bled all the way to the downside up until this point. So looking at the monthly, we do have 17 days and 14 hours until expiry. Now the big idea is this: as long as we are underneath the sell side imbalance, buy side inefficiency that was delivered in August, risk is to the downside. So numerically we're saying this: as long as Bitcoin's monthly is failing to reclaim back above $28,182 over the next 17 days and 14 hours going into November, risk is to the downside. However, if Bitcoin does decide to come and ejaculate above the August imbalance, then it would be bullish, it would be a change of character, it would be a break of market structure, and thus my opinion would change and I'd move the needle on that. But when the data changes, I change my opinion. However, I'm ironclad until not. Simple. So again, key takeaway, 28.1. As long as we're underneath, bad. If we go above, that would be good. Now, an extension to this would be this: we are also underneath the 21-day look back period, which is this moving average here that you see, which is within the yellow box area. So I'm just going to zoom in on this so you can really see the logic, right? So see this red line? That is that's the 21-day look back period on a monthly. So technically speaking, the monthly is underneath its 21-day EMA. It's pretty bad. So that just brings it to a nice conclusion. Sell pressure, downtrend, and momentum. Let's look at momentum really quickly. So we do see on momentum, we do have the RSI with a decline posture as long as Bitcoin's failing to reclaim back above $26,969. That just means the momentum will continue waning and continue declining as long as Bitcoin's failing to reclaim that magic number of 26.9. Cool. Let's move on to the weekly. So move that to the side, pull up a weekly, and let's begin. So looking at the weekly, what do we see here? So we do see similar signature as the monthly in saying there is sell pressure biblically outsizing the buy pressure, which does mean over the next 1 day and 14 hours going into the weekly expiry, the bears have the upper hand. The sellers are in full control of this price action discovery. Now, an extension would be this. We also see price action underneath all of its major moving averages, denotably the 21-day moving average, the 55-day moving average, and also the 200 simple day moving average, which is the big daddy, as it were, right? You know when you're playing a game and at the end of the game there's a big boss? The big boss is the 200-day simple moving average. As long as price action is submerged underneath, it's struggling to get back above water, and that would have a negative impact on price action. Simple, very simple. Not here to confuse you or lose you. Here to spoon feed you the nuance. Every day at noon, Bitcoin Noon podcast, without fail, baby. Anyways, cool, let's go back into it. So looking at the chart, what else do we see? We also see the RSI and MACD with a downside posture. Now the inflections are as follows. The RSI will continue nosediving as long as Bitcoin's failing to close back above 27,932 on a weekly basis. Also on a weekly basis, we've got the MACD falling underneath $27,652. So, simple English, as long as we're underneath 27.6, there is no chance to the upside. Very simple. As long as we're underneath 27.6, there is no chance to the upside. Easy as that. Okay, cool. So yeah, I think we've covered most things there on the weekly. The sell side imbalance, we see that in August, the same signature that we see in the monthly as well. We've also got RSI and MACD falling, and we're underneath all major moving averages and engulfing sell pressure. I think it does that. That's cool. Brilliant. Let's move on to the daily. Looking at the daily, what do we see here? So looking at the daily, this is actually something brand new. So if you listened to these podcasts before, and a lot of this is sounding like deja vu, this right here is something completely brand new that I've never mentioned on this podcast ever. Now, check this out. We've got a sell side imbalance, buy side inefficiency, but this was delivered in October, not in August. Remember, the monthly and the weekly sell side imbalance was in August. However, the daily imbalance has now been predicated in October, meaning we've got a tighter invalidation now than we did have prior. So I'm going to spoon feed it. If you don't worry if it's going over your head, I'm going to spoon feed it and break it down. So let's discuss. We are 7 minutes into this. I think we're doing really well for time. If I'm talking too fast, simply watch this again or slow down my diction. If you're watching on YouTube, you do have the ability to slow down the repertoire. Anyways, I'm going to press on because time is of the essence. So looking at the October imbalance that predicated on the 11th of October, meaning Wednesday this week. So Wednesday this week, we had the worst candlestick that we've ever had since August. That's a fact, not an opinion. Now, to further exemplify this, we've got 70% sell pressure engulfing the market. So the sellers are winning the tug of war. The sellers are clearly winning the tug of war of dominance. And we are also underneath all major moving averages, something that we do see on the weekly as well. Okay, so we're underneath the 21-day EMA, the 55-day EMA, as well as the 200 SMA, which is the simple moving, not the exponential moving. Okay, now the clear distinction there is that the simple moving is a bit more laggy and the exponential moving puts a bit more weight on current price action delivery. Simple thing really. But again, go on YouTube, ask AI, seek and thee shall find. Always conduct your own due diligence. Always G-check what I'm spewing off, right? Whatever I'm spouting or banging the table about, make notes on it and do your own due diligence and you will find out everything I'm saying is ironclad. Anyways, let's leave it there. So looking at momentum, what else do we see? We also see that stochastics are falling and they do remain negatively decline postured, working lower pectoral, right? They get that? Decline postured, working lower pectoral. Nice way to remember this, by the way, right? If the market's declining, I like to think of it working lower chest. But if it's inclining, it's working upper chest, right? Very simple. It's a nice way to mentally framework the momentum. And what's in motion stays in motion till it stops. You know, all the jazz that I like to go into. But at the end of the day, look, the momentum will continue going to the downside as long as Bitcoin is failing, which it is failing, to reclaim back above $27,874. It's not an opinion, it's mathematics, it's calculus. What gets measured gets accomplished. It's very simple in my world. Elon Musk has said this. If you heard me quote it, get ready for it again. He's seen many men and he's seen many women break the laws of woman and man. But Elon said this: no woman or man has broken the law of physics. Not one woman or man has broken the law of physics. So what's in motion stays in motion till it stops. Word to Newton, and we are not in the business of catching falling knives, okay? If the knife is proverbially falling, we wait for the dust to settle to then reaccumulate and, pick it back up if necessary. But we're not here to really hypothecate future. We're here to read what's going on today and what's going on right here, right now. And we can measure the trend to come to that, measure the volume to come to that, and measure the momentum to come to that. And that's very indicative of volatility as well. Keeping it simple. So underneath 27.8, risk is to the downside, particularly on a weekly time frame. Now, looking at this imbalance, this is so important, right? So important. As long as Bitcoin's failing to reclaim back above 27.1, there is just no chance to the upside. I'll be on record saying that. As long as over the next 13 hours and 42 minutes going into the daily expiry, I do believe as long as Bitcoin's underneath 27.1, the bears are in control, the sellers are in control, the hopium crew, the bullish crew, they're getting slaughtered, they're getting egg on their face, and they're getting slit by their throat, proverbially speaking. Sheep and pigs get slaughtered. Do not be sheep. Do not follow people, right? And don't be pigs. Don't be too greedy. Serious topic that will keep you alive. Okay, we're not here to follow Tom, Dick, and Harry. We look at the Fear and Greed Index as a proxy gauge on Tom, Dick, and Harry. And the Fear and Greed Index is neutral, right? If they're neutral, I'm bearish, dude. Very simple, okay? I'm not here to trade with Tom, Dick, and Harry. We're not the same. We're cut from a different cloth. Anyways, leave it there. Don't want to get too gassed. Let's pull up the 4 hour and let's bring this bird to a landing. So looking at the 4 hour, what do we see here? Now, this is something that we did say all this week, right? Now, going back to September, we do have a buy-side imbalance, sell-side inefficiency, which has held us as current support in October. So September's support is now current support in October. This is why I love technical analysis. I love it to the core because numbers don't lie, okay? This happened months ago and it's still relevant now. I put weight on it. As you can see, this blue rectangle box denoted by the cyan baby blue color. Cyan is just another word for baby blue, by the way, if you're getting lost. And it goes back to September, right? September the 28th is the support. We have been grinding this rectangle box region and treating it very, very well. And we said to ourselves this week, as long as we're above 26.6, the bulls do have some hopium to the upside. This is one thing about these podcasts. Even though I've got a bearish ingrained sentiment, I will always try my utmost best to tell you when it's looking good or when there's a glimmer of hope or when there's some light at the end of the tunnel, because that's ethical and that's real, and I'm here to give you the real talk, okay? This is a journal for me and it's to hold myself accountable so we can reflect on this and say, okay, was I right, was I wrong? And every single podcast I've been right thus far. Keeping it simple. So let's look at this then. As long as we're above $26,700, risk is to the upside on a 4 hour basis, meaning on an intraday level. Okay, macro speaking, I'm still bearish. Bearish on a monthly, bearish on a weekly, bearish on a daily. However, the intraday, which is the 4 hour, does look poised for some upward bounce. Okay, whether that's a mean reversion or a standard distribution, I think it will be. I don't think it will be a full trend reversal to the upside per se. There's a little distinction there. Okay, there's a thin line, but there is a line. A soft bounce, a dead cat bounce is not a trend reversal. Okay, don't be confused by that. I think we'll preliminary bounce because the momentum has had a full reset. I think we'll bounce up a little bit over the weekend, and then subsequently going into Legacy Open next week, that's when we'll see the new debacle unfold. Okay, very simple. So over the weekend, yes, I do think there's some hope as long as we're above 26.6, or if you're being cute, 26.7 if you want to be aggressive. But again, as long as we're underneath 27.2, again, this is the Bitcoin tipping point. So you've waited till the end of the video. I'm going to let you know right here, right now, the tipping point for me on this synopsis is $27,200. Now, yesterday we done a podcast all about the moon cycles and the implications of the new moon and the full moon. Today we've got a fresh new moon, which means typically, statistically, there is significance to the downside, and it's been measured for hundreds of years, plural. Now, there's scientists that have done many papers on the moon cycles and the lunar effect on the stock market. There's been many papers, many books, and many movies. I believe there's a program on Channel 5. If you're from the UK, I believe there's a program on Channel 5 at the moment. It's 2 episodes long, and it tells you all about the lunar cycles and how it affects human emotion, market sentiment, etc. It's worth a watch if you've got the time on your hands. If not, the main idea is this: when you cannot see the moon in the sky, typically markets go down. However, when you can see the moon, when it's a full moon, markets tend to go up because humans get more risky. Now, humans are 60% made of water on average. The moon, its clinical definition in the dictionary is a satellite. The satellite, being the moon, affects the tide of the ocean because it's water. Humans are water, thus it affects our psychology. Right? There's a little bit of correlation between astrology, psychology, numerology. It's all related, baby. Okay? God's divine design is present in everything, especially mathematics and the sciences. I believe that's divine intervention. I'm going to leave it there, not go too down the rabbit hole. If you want to learn more about that, listen to yesterday's podcast where we fleshed it to the nth degree. So cool, I'm going to leave it there. So in summary, as long as we're below $27,200, risk is to the downside, and I'm betting the market falls myself. An extension to that would be the new moon that is predicated today. I do think there'll be another week or so of downward pressure until we see a upward advance, macro speaking, on a daily, weekly and monthly basis. So I'm going to leave it there. Each one teach one. Enjoy your weekend. Remember, it's not all about money. It is about health and love. But if you do not have custody of your time, you will be working harder for longer for the same fiat barter that they are debasing at a biblical pace. So remember, the ECB, the European Central Bank, the Bank of England, they're all in Morocco today discussing monetary policy. It will have an implication on your cost of living crisis, quote unquote. So I'm going to leave it there. God bless. Until the next one, I will see you soon.